guys, I'm back again with another dividend ETF to review. If you like buying ETFs that pay you dividends just to hold them, I actually just now created a dividend income ETF playlist with all of my reviews of several high-yielding dividend ETFs such as QILD, JEPI, and NUSI, as well as some of the more popular blue chip company ETFs that pay dividends like SCHD and now DGRO. ETFs are a great time-efficient way to get exposure to wonderful companies for cheap and get paid to do so. DGRO is a popular ETF in the community, so why not take a closer look? Just make sure you've hit that like button and are subscribed before we get started. I also often make videos based on subscriber request, so if you have a stock or ETF that you want me to review, leave it in the comments below and I might just make a video on it. Let's get an overview of what DGRO is. DGRO stands for iShares Core Dividend Growth ETF. iShares is owned by BlackRock, which is actually the largest assets under management financial company in the world with over $9 trillion in assets. The goal of DGRO is to get access to companies that have a track record of paying dividends and are diversified across different industries, and they don't have too high of a payout ratio. All things that we would look for if we were building our own dividend portfolio individually. So to accomplish this, they actually track the Morningstar US Dividend Growth Index. Companies have to have at least 5 straight years of uninterrupted annual dividend raises, and their earnings payout ratio cannot be higher than 75%. Now that last criteria unfortunately takes out the real estate sector or REITs, which is exactly what SCHD also does. Guys, what is it with these ETFs and excluding one of the best dividend paying sectors in the market? Also missing with DGRO is the energy sector. Now that is the oil giants like ExxonMobil and Shell, which also often pay high dividends, but also have high payout ratios. These are non-existent in the Morningstar index it's hoping to track. Now the goal of the fund is not to actually go out and actively beat the market, but it uses a passive approach to meet the fund's objective, which is to track the Morningstar US Dividend Growth Index with its criteria in place. At least 80% of their assets at all times will go toward actual stocks, while 20% will go toward futures, options, contracts, and of course cash on the side. So I would say DGRO has pretty simple criteria, it doesn't really have very complex rules, and it is not a covered call ETF. There is also no downside protection, so if the market takes a tumble, this ETF doesn't care if you are on tempered steel glass or regular glass, you're going to come crashing down with it. Let's take a look at some of its major holdings and sector allocation. So DGRO has about 20% exposure to tech, 17% to financials, and 17% toward healthcare. Their largest holdings are companies you've definitely heard of before. They have JP Chase, Microsoft, Verizon, Apple, Johnson & Johnson, Home Depot, Pepsi, among their largest holdings. Altogether, there are around 387 positions in total. Next, let's compare DGRO to SCHD and an income ETF like JEPI. Now, before I get any more people complaining that you cannot compare DGRO to income ETFs as that's not an apples to apples comparison, which is completely true, I'm more so showing this for informational purposes on what you're getting because a lot of the people who buy income ETFs are also likely to own a dividend ETF like DGRO to supplement their portfolio. It's similar to if you are having milk and cookies, two things that often go together, and I wanted to show you the nutritional info for both, even though they are two totally different things. So DGRO has been around since June of 2014, which is almost 3 years later than SCHD, which has been around since 2011, but almost a good 6 years before JEPI, which came out in May of 2020. Now, because it doesn't have any REITs or oil stock or companies that don't have excessively high dividend payouts, DGRO has just a 2.05% dividend yield, which is well below SCHD, which is just under 3%, and well below JEPI, which is around an 8% dividend yield. I'll talk about why this might not actually be a bad thing a little bit later. DGRO is a very big fund with over $20 billion in assets under management, and they have a super cheap expense ratio of just 8 basis points. That translates to just $8 for every $10,000 you invest in them. Not bad for how much time and effort this ETF saves you. You don't need to be listening to earnings report. You don't need to be doing continuous research. Just buy, stash, and collect cash. The strategy has to have the criteria we previously mentioned, as it's tracking Morningstar's US Dividend Growth Index, which comes out to around 387 stocks once everything is screened, which is considerably more than JEPI or SCHD. Both are around 100 holdings. When we look at the performance over the last 7 years, DGRO has actually done a very good job staying on par with the S&P 500. They both delivered around a 13 to 14% annualized returns, and a $10,000 investment would have turned into about $24,000 today. That's not too bad at all, but at the end of the day, DGRO did slightly underperform the S&P 500. But where DGRO really starts to shine is its dividend growth over time. They went from just 65 cents in 2015 per share to now well over $1.03 in 2020 and beyond. They have had a 5-year growth rate of 10.3%, which is really good for an ETF. That's like you getting a 10% raise at your job every year for the past 5 years. And since this is an ETF that specifically looks for companies that increase their dividend each year, we can start to project and almost lock in dividend raises every year, something that you cannot do with individual stocks or other income ETFs such as QILD or JEPI. In fact, when we look at yield on cost of a share of DGRO from October 2015, when it was around $24.64, and they paid around 65 cents a share in dividends, that gives us about a 2.64% dividend yield. But let's imagine we held that share of DGRO all these years and just continued to collect monthly dividend payments and watched our money grow. Our cost basis today would still be $24.64, but the yearly dividend is now about $1.04, which means we now actually have a pretty impressive dividend yield of just over 4.20%, which will only get higher as time progresses. This is why I think this is a great ETF for younger investors who have time on their side to see those dividend payments and yield continue to go up every single year. That doesn't necessarily mean it's bad for an older investor, but it might be tough for an older investor to get a 2% starting yield and be content with that. But at least the companies they are invested in are relatively high quality. Let's talk about our key takeaways and summarize here. So DGRO has a very low expense ratio. According to BlackRock, they are cheaper than 96% of its competitors. By paying less than $100, one could get access to a fund that holds nearly 400 different dividend-paying companies, most of which have sustainable dividend payments and have a track record of raising dividends, giving us a yearly pay raise. But just like SCHD, there is no downside protection, and they also have no exposure to REITs, and they also don't give out dividends every single month. DGRO pays out every quarter, and they follow the very popular March, June, September, and December tranche of payments. One thing that DGRO actually boasted on their website is that they pay 0% in capital gains, and has actually never paid a capital gains distribution. Now, I know everybody and their mother wants to know about taxes, but DGRO should be paying qualified dividends and should be pretty tax efficient. That's going to be my overview of DGRO, guys. Make sure you help out a small-time YouTuber by hitting that like button and subscribing to the channel, because I make videos like this all the time. Remember, my videos are always available in podcast form under the Collect Cash podcast name wherever you get your podcast. And if you have any questions or video requests, let me know in the comments below, and I will buy, stash, and collect cash. See you later.